Hey everyone, welcome back to the channel. Today we're talking about what could be the biggest shift in the US cannabis industry in decades, a change that could completely reshape the market and send cannabis stocks soaring. The US cannabis industry could be on the verge of its biggest shift in decades. Legalization keeps expanding state by state, but at the federal level, cannabis is still classified the same as heroin. Under federal law, it remains a Schedule I drug, officially considered to have no accepted medical use and a high potential for abuse. Because of that, the entire industry operates in a gray zone. Cannabis companies can't use traditional banks, they pay heavy taxes, and they're blocked from major exchanges like the NASDAQ and NYSE. The latest push to reschedule cannabis began in October 2022, when President Biden ordered a federal review. In August 2023, the Department of Health and Human Services recommended moving it to Schedule III, which would finally recognize medical use and ease restrictions. Progress has been slow, but optimism is rising, especially after Donald Trump signaled support for rescheduling. Many believe it could happen this year or next. The biggest reason it matters is taxes. Because cannabis is still Schedule I, companies face Section 280E, which blocks normal deductions like rent and payroll. Many end up paying tax rates above 60%. If cannabis moves to Schedule III, 280E disappears. That instantly boosts profits, expands cash flow, and lets these businesses operate like normal companies. It would also open the door to banking and investment. Right now, banks can't work with cannabis firms, and big institutions like ETFs and hedge funds can't invest. Rescheduling could change that, giving companies real access to capital and bringing legitimacy to the entire sector. Let's look at the top 3 U.S. operators: Green Thumb Industries, Cresco Labs, and Curaleaf. Green Thumb Industries, my personal favorite, reported $291 million in revenue in Q3 2025, with $80 million in adjusted EBITDA, a 27.5% margin. It stayed profitable with $23 million in net income and $74 million in cash flow, holding $226 million in cash and no major debt for 4 years. GTI even launched a new $50 million share buyback, proving confidence in its future. It continues to expand strategically, adding adult-use stores in Minnesota and growing its RYTHM brand nationwide. Cresco Labs reported $165 million in revenue and $40 million in adjusted EBITDA at a 24% margin. It had a small $22 million loss from refinancing costs, but kept top market share in several billion-dollar states. Cresco is expanding in Ohio and Kentucky and preparing a product launch in Germany, positioning for international growth. Curaleaf, the revenue leader, posted $320 million in Q3 sales, a 50% gross margin, and $69 million in adjusted EBITDA. It reported a $54 million loss, but strong cash flow, $53 million from operations, and $37 million free cash flow. About $46 million of its revenue came from Europe, up more than 50% year over year. Curaleaf also expanded its credit line to $100 million, strengthening flexibility for future growth. Here's how they stack up. Green Thumb, consistent profits, strong management, and solid cash generation. My favorite in the sector. Cresco Labs, disciplined and efficient, ready to scale fast once financing improves. Curaleaf, the international powerhouse, likely to gain most if banking and investment barriers fall. If federal rescheduling happens, all three will benefit, but Green Thumb looks best positioned to lead the next phase of growth. For investors, rescheduling would be a game changer. When 280E is removed, these companies will instantly become more profitable. Margins rise, cash flow jumps, and that usually pushes stock prices higher. Access to banking will also unlock cheaper financing, allowing companies to reinvest, open new stores, expand cultivation, launch new products, and even move into global markets. Today, most growth is funded with internal cash or expensive loans. After rescheduling, expansion becomes much easier. Put it all together: higher profits, real banking, new investment, and faster expansion, and you have a massive boost in potential for the entire cannabis sector. Green Thumb, Cresco Labs, and Curaleaf are all set to benefit. But my pick remains Green Thumb. It's consistent, profitable, and ready to scale. If rescheduling happens and 280E goes away, Stronger results could show up almost immediately, driving a major re-rating of cannabis stocks. This is the moment investors should be watching closely. Whether it happens later this year or in 2026, the U.S. cannabis industry is on the edge of a major transformation. And when it does, the companies that stayed disciplined and cash flow positive like Green Thumb, Cresco, and Curaleaf will be leading the next wave of growth. Thanks for watching. Make sure to like, subscribe, and share, and let me know in the comments which cannabis stock you think has the most upside when rescheduling finally becomes reality.